Hello guys, in previous lecture we have discussed about the profit and loss account, that why company they prepare profit and loss about the profit and loss account, that why company they prepare profit and loss account, and we have seen the format of profit and loss account, that how we prepare P&L account by following schedule 3. Right. Now today we will be taking one example of profit and loss account and we will be discussing more about profit and loss account. So here I have taken the example of bakery. So the very famous branch is there or brand is there in Pune, that is Pune Bakery. So I will be discussing about Pune Bakery right now. So if you see, I have taken the transactions of Pune: interest received, discount received, commission earned, salary, audit fee, traveling expenses, closing stock of raw material, opening stock of finished goods, sales, etc., etc. So here you can see the transaction which are given in transaction book, and after with the help of these transaction, what we have to do, we have to prepare the profit and loss account of Pune Bakery. So now if you see here, I have already taken the pre-written format of profit and loss account, which is per schedule 3. So you can see in top, company has to recognize their revenue from operation. Now if I talk about revenue from operation, and if I ask you to find out that which transaction you will be recognizing in this P&L account. So here you can see various transactions are given. So we have to find the sales, that what sale company has performed. So here you can see sales is given, right? Sales is given here. So sales of bakery cake, or you can say sales of cake and cookies. Here sales belongs to sales of cake and cookies. So what is going to be the operation of bakery? Definitely manufacturing of cakes or production of cakes and selling those cakes to the customer. So what we will do, we will show this sales in P&L account in first heading or for an item, that is revenue from operation. After that, if you see, revenue stream 2 is given, that is their income. We have discussed about their income. So whatever income company is earning apart from their income, so it can be interest income, it can be dividend income, it can be rental income, those things are to be recognized in other income line item. So if I ask you to find out the other, so you can see here interest is other income, discount received can be other income, right? Or you can adjust it from purchase also. So instead of treating it as a other income, we adjust this amount in purchase, right? Then if you say commission earned, definitely it is other income. Then salary is your expense, audit fee, traveling, they are not your income. Bank charges, carriage on sales, postage, bad debts, discount paid. If that nothing is mentioned, we will assume discount paid. It will be your expense, right? Now, if you see further, if you see here, discussed about revenue, that what items you will be recognizing in revenue and other income. After that, if I talk cost of material consumed, purchase of stock in trade, so we have to learn that how we can calculate the cost of material consumed. In previous lecture, I have told you that we will discuss about cost of material consumed. So we will discuss the example of bakery only. So you know what Pune Bakery do? They produce cake, right? They produce cake. Now you just let me know if they want to manufacture cake. Let's suppose have commenced their business on 1st April 2020, right? Let's suppose they have commenced business on this particular date. So definitely to produce a cake, what any bakery requires. So they require milk, right? I'm talking about raw material. What raw material they will be requiring? So definitely they will be requiring milk. They will be requiring sugar, they will be requiring choco powder and etc. Right? I don't know how to cook or bake cake, but anyhow, I'm taking few examples, right? So they require milk, they require sugar, they require cocoa powder or choco powder, etc. Right? Now to bake the cake, what Pune Bakery has done, they have purchased raw material, right? They have purchased raw material of rupees, let's assume 5,000, right? They have purchased raw material of 5,000 in beginning. And what they will be doing, definitely they regularly they will be baking the cake. Regularly, what they will be doing, they will be buying the raw material, right? So let's assume that during Pune Bakery has purchased raw material of 5 lakh. Instead of 5,000, we will assume amount 5 lakh, right? With the help of this raw material, what Pune Bakery has done, they have baked 1,000 cakes, right? They have baked 1,000 cakes, and selling price of one cake is 1,000 rupees. Right? Selling price of one cake is how much? 1,000 rupees. So they will 1,000 rupees. Right? Selling price of one cake is how much? 1,000 rupees. So they will be able to generate profit of how much? They will be able to generate profit, sales of 10 lakh rupees. It's not profit, it will be sales. Right? So here you can see there will be sale of rupees 10 lakh. there will be sale of rupees 10 lakh. Right. Now, further, I want to discuss few more things with you. That here, what Pune Bakery has done, they have purchased raw material of 5 lakh and they are able to produce 1,000 cakes, right? And they are able to get revenue of 10 lakh rupees during the year, right? Now, let's suppose on 30th March, right? 30th March, what Pune Bakery has done, they have purchased raw material, right? In total, they have purchased raw material of 5 lakh. So on 30th March, Pune Bakery has purchased raw material of, let's suppose, 30,000 rupees. And this 30,000 amount is already included in this 5 lakh rupees. Now, they have purchased milk, cocoa powder, sugar on 30th March, right? But they are not able to consume this 30,000 raw material till 31st March. Right? They are not able to consume, they are not use this milk, this sugar for baking of cake, right? Now, you just see here, they are able to consume this raw material till 31st March, right? Now, what company will do here? You know the concept of annual reporting, or we have already discussed about financial reporting. Now, we discuss about annual reporting. What is the meaning of annual reporting? What company do? They prepare their books every year, right? So they year concept of financial year, right? So what company do? Companies start recording their transaction from 1st April and they close their transaction on 31st, right? So let's suppose here I'm taking example of 2021, right? So for 21, when company will open their book, company will open their book on 1st April 2020 and they will close their books on 31st March 2021, right? Again, next year, that is 2022, what company will do? Company will prepare fresh books. So company will open their books from 1st April 2021 till 1st March 2022. Right. So here, whatever stock will be meaning, this is going to be the closing stock. This is going to be the closing stock, right? Here you can see companies purchase raw material, that is milk, sugar, chocolate powder, but company is not able to consume that milk, chocolate powder for manufacturing of or baking of cakes, right? So here there will be closing stock of how much? There will be closing stock of 30,000 rupees. Now this 30,000 stock will become opening stock for this year. It will become opening stock for this year. This concept is very simple, you know. So whatever stock which you are not able to consume during the year, that stock will become closing stock for that particular year, and again the same stock will become opening stock for next year, right? So here what company will do? Company will consume this 30,000 raw material in year 21, 22, right? Here what company will do? Company will not throw that raw material, right? Definitely company will consume that raw material. So in this year, what company will be doing? Company will be consuming this raw material. So here you can see there was a closing stock of how much? There was a closing stock of 30,000 rupees, right? Now this 30,000 closing stock will become opening stock for coming year, right? So I have written, you just see here I have written opening stock. Now this is closing stock for year 2021 and it will become opening stock for this year, right? Now next year what company will doing? That's 21-22. Company will buy more raw material, right? Because they want to increase their sales, right? But what company will do? Company will buy more raw material. So let's suppose this year company has purchased raw material of 7 lakh rupees, right? Instead of 5 lakh, now I will take company's purchase raw material of 7 lakh rupees, right? So it was opening stock of how much? 30,000 rupees. And again, what company has done? Company has purchased new raw material 70,000 rupees, 7 lakh rupees. Now, if I ask you that what total raw material company has listed now, right? What total raw material company is having with them? So you can see here, there was opening stock of how much? There was opening stock of 30,000 rupees, and again what company has done? Company has purchased fresh raw material, that is 7 lakh. So in hand, the raw material which company is having with them, that is 7,30,000 rupees, right? During the year, company is having raw material of 7,30,000 rupees with them, right? Now let's suppose out of 7,30,000 rupees, what company has done? Company has consumed raw material of, let's suppose 6,30,000 rupees. 6,30,000 rupees. So what will be the remaining stock of company? Here you can say what will be the closing stock of company. So here you can say the closing stock of company is going to be 1 lakh rupees. Why closing stock of company is going to be 1 lakh rupees? Because during the year company was having stock of rupees 7,30,000 with them. And here company has consumed 6,30,000 per stock. Company ने क्या किया? 6 lakh stock consume कर लिया. So here closing stock value is going to be 1 lakh rupees. Now this closing stock will become opening stock for next year, right? This closing stock will become opening stock for next year. Now you might be thinking that what is opening stock? Again, I'm explaining you that what is opening now for next year. So here you can see for year 21 to right? We have seen the opening stock was how much? 30,000 rupees and company has purchased 7 lakh rupees. So total stock which company is having with them is 7,30,000. सारा पीस का दूध, sugar ये सब पड़ा हुआ है. कभी कंज्यूम कितने का किया? 6,30,000 का stock कंज्यूम किया. And this is going to closing stock for year 21-22, right? Now this will become opening stock for year when company will prepare next year books, right? So now company will prepare books for 22-23. So here company will start their books on 1st April 2022. So this closing stock will become opening stock for company, right? So this is how company calculates their closing stock, opening stock, and they find out that what raw material they purchase, right? Now, if I ask you to find out the raw material consumed, because in P&L account, we record cost of material consumed. Cost of material consumed. So let's suppose here some data is given to you. Let's suppose purchase is given. In question, right? So the purchase of how much in year 21-22? So you can see there was a purchase of 7 lakh rupees, right? Now opening stock is given. We have seen the opening stock is 30,000 rupees. So opening stock value is 30,000 rupees, right? And when company has calculated their closing stock, so generally what we do, company calculates or company count their closing stock. If I talk about textile business, right? I'm trading of jeans. I'm having showroom of jeans. So what I will do if I want to find out the closing stock, so what I will ask my employee to count that what number jeans are remaining, what number jeans are remaining in our stock, which we are not able to sell during the year. So that is going to be my closing stock. Similarly, what company will do, company will calculate or company will try to find out that what what liters of milk is remaining in their stock, right? So this is how they will calculate the value of closing stock. So company has calculated the value of closing stock, and value of closing stock is 1 lakh rupees. Now, if I ask you to find out cost of material consumed, cost of material consumed, that is COMC. So generally the formula is, I will tell you the formula. So I think that I should not tell you the formula first. First discuss the concept that what is cost of material consumed. So you can see first we have to find out that what company was holding during the year, right? So here we have seen company was having opening stock of 30,000 rupees. Right? Company was having opening stock of 30,000 rupees, plus company has purchased new stock 7 lakh rupees, that is milk, sugar, etc. Then at the end, company found that they are not able to consume stock of rupees 1 lakh. So if I ask you to find out that what stock company has consumed during the year, so you will say that whatever stock company has purchased, including opening stock in the year, minus closing stock, right? Minus closing stock. So you can say that the cost of material consumed value is going to be 6,30,000 rupees. Right? This is going to be the value cost of material consumed. So if I ask you to write down the formula, so formula is going to be opening stock plus purchase minus closing stock, right? This is to find out cost of material consumed. Now you might be thinking that, sir, why we are excluding closing stock and we are calculating cost of material consumed? See, in P&L account, what we will be doing, we will be showing cost of material consumed. In top, we will show revenue, right? How company has generated revenue by selling cake, right? And how company has manufactured cake by incurring those expenses, right? So we have to record only cost in P&L account, which is actually incurred, right? So if you see there is a closing stock of rupees 1 lakh, this is going to be the opening stock for next year, right? And this expense is going to be incurred in next year, right? Right now we have paid the cash, but this stock is going to be consumed in next year. So that is the reason we are excluding this stock. We'll be showing this as a cost in next year, right? So that is the reason we are excluding it from cost of material, right? So similarly, if I ask you to find out the cost of material consumed in this given case, so formula is going to be opening stock plus purchases minus closing, right? So here we can see opening stock is given 2,000 rupees. The purchase is given. So purchase value is how much? Purchase value is 10,000 rupees. Purchase of milk, choco powders, sugar, and closing stock of this raw material is given 1,500. So you can see that the total raw material consumed during this 2,000 plus 10,000 minus 1,500. So it will be 10,500 rupees. This we show in P&L account, right? So what we have done, we have covered these transactions also. Right? We have covered these transactions also. So I will show you how to record these expenses or revenue. So we have already seen that what we will be showing in revenue, that is sales, 18,000 rupees. Then after we will be showing revenue stream. I should remove this item. Okay. Now in revenue stream, we will be showing other income, right? So other income is interest rate at 500 and commission earned 800 rupees. So I will take the figure from here, 500 plus commission earned 800 rupees. So you can see other income value is how much? 1,300. Now we have calculated cost of material consumed. How we have calculating stock? I've already written. I'm taking it from Excel also. So there will be revision of the stock material consumed. So it will be opening stock plus purchases minus closing stock, and you will get the same figure we calculated here, that is 10,500 rupees. Now another concept is purchase of stock in. We have already seen that what is the meaning of purchase of stock in trade, right? So here what bakery has done, bakery has a soft drink also, right? So whenever you will visit any bakery now, so what bakery do, they manufacture or bake their cake, and along with their cake, what they do, they buy some finished goods from other company. So here bakery, what they do, they cold drink also, right? So what bakery has done, bakery has purchased cold drink of Coca-Cola, brand of Coca-Cola or Pepsi or Thumbs Up, etc., etc. Right? So here, what we will do, if company is any stock, so they will be recording this stock in P&L account, right? So they have cold drink of rupees 1,000, right? Now, changes in inventory. What is the meaning of changes in inventory? Inventory means, just wait. Changes in inventory means difference between stock and closing stock, right? Changes in inventory means difference between opening stock and closing stock, right? Now, as per the definition of as per the definition given in accounting standard book, we have discussed about GAAP. So there is specific Ind AS for inventory, that is Ind AS 2. If you want to record inventory, or if you want to find out the definition of inventory, so you have to read Ind AS 2, right? So in Ind AS, the definition of inventory is given. It includes raw material, it includes WIP, it includes finished goods. It includes finished goods also, right? Now, what is the formula for changes in inventory? Changes in inventory's formula is opening stock minus closing stock. Formula is opening stock minus closing stock. This is the formula. Closing stock. Why we are showing changes in inventory? Because when we're preparing P&L account by following the format of T format, when we were preparing trading and P&L. So previously we were following T account, right? So here we used to write down opening and we used to write down purchases, if you are able to recall. So you will find this concept very easy. Here we were recording sales. We were recording closing stock, right? We were recording closing stock here. And we were in direct expenses in debit side. And after that, we were calculating gross profit, right? So if you see, so what we were doing, if we are crediting closing stock and if we are debiting opening stock, so we are taking difference of closing and opening stock, right? We were taking difference of closing and opening stock. I will take one example here. Let's suppose what company has done. Initially, company has purchased, or let's suppose I'm taking example here. I will write down the example of cold drink, right? What company has done? This is here 21, 22. And 223, right? Here, what company has done during the year, company has purchased cold drink worth rupees 10,000, right? And what company has done during the year, company has sold cold drink of rupees 8,000, right? So company has purchased cold drink of rupees 10,000 and sold cold drink of rupees 8,000 in market. So what will be the closing stock here? Closing stock is going to be 2,000 for the year 2020. So here closing stock value is going to be 2,000 rupees, right? Now this closing stock will become opening stock for this particular year, right? This will become stock for 2023, right? So here I can write down opening stock of 2,000 is there, right? If you see the closing stock of, now I won't be discussing about purchase for your understanding. Here at the year, the closing stock value is 1,500, right? Closing stock value is 1,500. Now, if I ask you, there was an opening stock of how much? There was an opening stock of 2,000 rupees. The cold drink stock was how much? 2,000 rupees. Right now, you have to ignore purchase if you want to understand this. And closing stock is of rupees how much? 1,500. Now, if I ask you, I'm taking very simple example, right? Let's suppose initially what your dad has done, he has given you 2,000 rupees, right? On 1st April 2022, on new financial year, your dad has given you 2,000 rupees, right? And at the end of it, your dad, he has asked you that what amount is remaining in your pocket, right? So you have said that, Dad, I'm having only 1,500 in my pocket, right? Your dad has given you 2,000 initially. And at the end of the year, your dad that how much amount is remaining in your pocket. So you said that 1,500, or you can say 15 lakh rupees, right? If you want to take example. So instead of 1,500, you can take 15 lakh rupees. So dad has given you 20 lakh, and at the end, the closing balance of cash in your pocket is 15 lakh rupees. Now, if your dad asks you how much you have spent it, where you spend it, or how much you have spent it, so it will be very easy for you to calculate, right? Initially, your dad has given 20 lakh, and at the end of year, you are having cash of rupees 15 lakh in your pocket, right? So this is going to be opening stock of cash, and this is going to be closing stock of cash, right? Now, if you find out the difference, so here you have spent it 5 lakh rupees. Your expense is of rupees how much? 5 lakh here, right? Your expense is of rupees 5 lakh. And where we show expense in P&L account. So similarly, what companies do, company also calculate changes in inventory. So with the help of changes in inventory, company will be able to find out the expense amount, right? So company will find out the difference. So you might be thinking that, sir, raw material different, in case of raw material, we have already adjusted opening stock of raw material and closing stock of raw material while we were calculating cost of consumed. Very true. So here, in case of changes in inventory, we have to ignore raw material calculation, right? We have seen the formula of raw material consumed, that was opening stock plus purchases minus closing stock. So what we will be doing, we will be ignoring this adjustment, right? So we have to take WIP, we will be discussing about WIP in next lecture, and finished goods. So if there is any opening stock or closing of finished goods or WIP, that we have to adjust here, right? So we will see the case again. So here you can see, is there any opening stock of raw material, finished goods, or closing stock of finished goods is given? So you can see here it is given. Opening stock of finished goods is how much? 3,000. And here closing stock of finished goods is given 2,500. Now in beginning of the year, you were having cash of 3,000 rupees. Now at the end of the year, you are having cash of how much? 2,500 rupees, right? So there, what you can say that you have spent 500 rupees somewhere. You have spent some 500 rupees somewhere. So here you can see. So here what we will do, changes in inventory, that is opening stock minus closing stock of finished goods. So opening stock how much? 3,000 minus 2,500, right? So 500, see, this is the expenditure which we are recording in P&L account, right? Now, if company has given any discount, so here discount received is there. So company has given any discount, so we will record in expense side, that is 150, right? And company received a discount, right? Company has received a discount. So generally what we can do, we can reduce discount from purchases, right? We can reduce discount from purchase of stock in trade, or otherwise we can show in income side, right? This, if we are receiving discount, it means our cost of purchase is going to be lesser, right? So here I mean that company has received discount on purchase of soft drink. So I'm reducing 200 from here, right? Don't get confused. 200 we are receiving discount. Either we can show that discount in side, or otherwise we can reduce it from purchase. There could be two adjustments, right? So what we have done, we have provided adjustment for interest, discount, commission. Then we have provided adjustment for closing opening stock, sales. Then this opening stock of raw material, purchase. Then closing stock of finished goods. Then this, right? We have provided adjustment for discount also. Right, now we will see other transaction. Now if you see here, company is paying salary, right? So we have to record salary in P&L account. This is our expense. So the salary of how much? 1,200. Plus what company is doing, company is paying audit fees. Definitely if company is appointing auditor, so they have to pay audit fee also, right? So chartered accountant will debit this expense in P&L account. Company is incurring some traveling expenses, so definitely company will traveling expense also, right? So we have covered debit side transactions. Now, if company is paying bank charges, here next transaction is bank charges. So what company is doing, company is also paying bank charges. So we will record bank charges here. Then carriage on sales, right? What company has done, company has paid some transportation charges, right? Carriage on sales means transportation charges, right? So company has paid 50 rupees 160 rupees transportation charges for purchase of raw material. Then company has paid some postage expenses. So postage we will be recording in P&L account. Then company is incurring some bad debts also. What is the meaning of bad debt, right? Let's suppose company has performed some credit sales. Company has performed some credit sales, and person who has purchased cake on credit, now he is denying that cake was not good and I will not pay you the money. So this is going to be the bad debts, right? Again, I'm repeating, if company is performing some credit sales, right? Now those debtors, generally to whom we provide credit sale, they becomes our debtors, right? Now debtors are saying, cake kharab tha, now I won't be giving you any money, right? So this is going to be bad debt, and definitely bad debt is an expense for any business. So here we will be recording bad debts. So we have covered all the transaction, right? We have covered all the transaction. Now we will find out the total of revenue. Total of revenue is going to be how much? It is going to be 18,000 plus 1,300. So this is the total of revenue. And if I ask you to find out total of expenses, here you can see what is the total of expenses. I will apply some formula and I will include all these expenses. Right? So this is the total of expenses. So what will be our earning before taxes? So I will remove this amount, and earning before interest and taxes is going to be total net revenue minus expenses, right? We will reduce total expenses. So here, this is our earning, approximately 5,000 rupees. Now we will be paying income tax to the government by using 30% slab, right? So 30% slab I'm here. So 30% of 5,020 rupees. So into 30. So this much tax we have to pay. And this is going to be the net earning, or you can say profit after tax, right? So in next lecture, we will see the annual report of Dabur Limited, and we will